Hey traders, welcome to part 2 of the price action basic series. Part 2 is on how to identify the current market phase. Okay, we've talked about direction in part 1, where the market can only have two directions, which is up or down. Okay, now we'll come down to the market phase. And as you may have already know, the market only has two phases as well. It's either trending or it's ranging. Alright, and we'll learn to identify the phase that we're in before placing any trades. It's important to know when the market is trending that we only apply trending strategies, okay? Which is essentially to buy on dips or sell in rallies, right? An uptrend, when the uptrend is confirmed, we want to look for dips and enter on the pullbacks. The opposite is true for a downtrend. Okay? The best areas to enter in the markets are when there's a pullback. In other words, selling these rallies. Okay? And when it's ranging, we want to look for these highs on the top of the range and the lows on the bottom of the range and look for trade opportunities. Now let's take a look on the charts again to identify the range we're in. So, like the first part, we always want to start with the higher time frames. Okay, because the higher time frames will dictate the movement on the lower time frame. Let's start with looking at the price structure here. A downtrend is when price makes a lower low and a lower high. Okay, we're in a confirmed downtrend. Right when the lows here of the previous structure was broken. Okay? And the bulls failed to make a new high. Instead, the bears jumped in and made a new low. Okay, so this is a trending market and it's a confirmed downtrend. Okay, after this point, we have a turn in the market and the bulls push a little higher than the previous pullbacks. Okay, and it beats the highs here. Okay, there's a mini high here, not too obvious on the daily, but on the H4 it should look more obvious. Okay, so we see that the structure is starting to change. This tells us that the market has shifted from a trending market to a ranging market. Okay, it's as simple as that. The bulls made a new high and the bears failed to make a new low. You guys see that? The bulls jumped in again. The bears jumped back in. Fails to make another new low. Okay? What happened? Alternates between the bulls and the bears. The bulls jump back in. It fails to make a new high. Okay, so this area here is a confirmed range. Okay? And in this case, the range looks like a descending triangle. Okay, remember that the range will eventually get broken. Okay, the support level here will not hold forever. And when there's enough orders piling on the other side, usually the market will just go through it. Like what happened here. The market always alternates between the phases. Okay, let's take a look at a big impulsive move like this. A big downtrend is happening, right? Strong momentum. What happens after that? It slows down. Okay, and when it slows down, the range forms. Okay, so it's as simple as that. Whenever you identify a big momentum move like this, or trend, it will not stay trending forever. Okay, it has to range, gather enough orders, and then continue its trend. Okay, it may continue its trend or it may just reverse. Okay, so how can we use this information for our trading? Let's take a look at the M15. This marks a turning point. The market trended. Remember, it cannot trend forever. So if you're looking to sell the rally, okay, make sure that it's not in the range. Because when it's in the range, it's gonna stay in that range until price breaks the range. Okay, so for example, this strong uptrend, a minor pullback. It's a good place for us to re-enter and go along, and it continues the uptrend. Okay, this area is basically a range. Okay, and I would advise you going with the direction, which is dictated by the impulsive wave. Okay, so in this range, you may look for buys. Okay, same thing with this range here. It's after a big down move. Okay, and you see that price has broken the previous structure, the previous lows. Okay, so the downtrend is confirmed. Okay, uptrend, higher highs. The bears jumped in, a new low, and it failed to make a new high. Direction is down. We know that we need to look for sells. And after a trending move, it falls into a range. Okay, therefore we know that we need to look for sells on this range. Okay guys, it's gonna make more sense later on when we're able to piece all the information together. Okay, but for now, this is how we identify whether the market is trending or ranging.